Understanding your PERA benefit estimate is important in order to help you better prepare for retirement. In this video, we're going to walk you through a typical estimate report from PERA to help you learn how to read and interpret your benefits. Your estimate consists of one page with 4 sections. At the top of the report will be the name of your plan. In this example, the member is in the coordinated plan. If you have service in more than one of PERA's 3 plans, you will receive a separate report for each plan you have paid into. Next is the date that the estimate was generated. The estimate is based on the information we had on file on this date. The top section of the estimate lists the member's name and date of birth. Below that will be the survivor's name and date of birth. If you are legally married, we will default to your spouse as the designated survivor, but you don't have to choose your spouse. You can choose anyone you want as a survivor, but you will not name them until you're ready to apply for your benefit. If this section of your estimate is empty, that is okay. Verify that the spelling and the dates of birth are correct. Accurate birth dates are necessary for accurate estimates. Next is the account balance for the plan, which is the sum of the member's contributions plus accumulated interest. You have the option to take a one-time lump sum refund of your account balance. However, this may not be your best option, as you would be giving up a lifetime monthly benefit from PERA, which we will cover next. Lifetime monthly benefit options are listed here in the midsection. The member's termination date and benefit effective date are listed here, and below that is the age that the member will be. In estimate number 1, the member will terminate from public service and begin collecting their benefit at the age of 62. Be aware that if you end up choosing a termination date or benefit effective date different than the ones on your estimate, your actual pension amount may also be different. Before we take a closer look at these estimates, let's take a look at the bottom section, titled Estimate Details, which lists the factors that were used to calculate these benefit amounts. First, let's review the accumulated years and months of service credit based on the termination date selected. Generally, we assume that service will continue without any interruption up to the listed termination date. To calculate the pension, we use the member's current high-5 salary, which is the average of the 60 consecutive months during which your earnings are the greatest. The high-5 used is what we have on file at the time of the estimate. Note that your average salary is not projected forward if you have a future termination date. This member's average monthly high-5 salary is $4,072. The last item is the formula percentage, which is the combination of the plan's multiplier, years of service, and the early retirement factor if your benefit effective date is before your plan's full retirement age. To combine these details and calculate your pension, we apply the formula percentage to the average salary. In this example, estimate number 1's single life monthly benefit will be 26.4% of $4,072, which equals $1,075, the gross amount before taxes or other withholdings. This is the largest monthly amount possible that this member will receive. When the member dies, any remaining contributions left in their account will be paid out to their beneficiaries, and all monthly benefits will cease. If you want to extend your benefit across a second lifetime, you have 4 survivor options to choose from: 25%, 50%, 75%, and 100%. Your monthly benefit is reduced based on the age and life expectancy of you and the survivor. To explain how these survivor options work, let's take a closer look at the 50% option. If this member chooses the 50% survivor option, their monthly benefit amount will drop from the larger single life amount of $1,075 to $1,010. When the member dies, this survivor's benefit will begin the month following their death. Because this member chose the 50% option, their survivor's monthly benefit will be 50% of what their amount was. 50% of $1,010 comes to $505. This is what the survivor will receive every month for the rest of their life. If the survivor passes away before you, your benefit amount will bounce back to the current value of the single life amount. A second survivor cannot be selected. Members may request multiple estimates, and each one will be listed under separate columns. Let's compare the 2 estimates listed in this report. Estimate number 2 projects the member's benefit if they retire and begin collecting their benefit at the age of 66, which is the coordinated plan's full retirement age. Under estimate number 2, the member's benefit increased for 2 reasons: service credit and age. The member has accrued 4 more years of service credit as they are working continuously up to age 66. In addition, the benefit is not being reduced for early retirement as the member has reached their plan's full retirement age. Comparing estimate number 1 to number 2, the formula has increased from 26.4% to 44.2%. Applying 44.2% to the current average salary, the member now has a gross single life benefit amount of $1,800 per month at age 66. Deciding when to retire is a personal decision based on what is best for you and your household. PERA's estimated reports help with planning and understanding the benefit options available. You can create your own custom estimates using the retirement calculator located in your MyPERA account. If you need additional help, feel free to reach out to our Member Service Center at 1-800-652-9026, Monday through Friday, 8 a.m. to 4:30 p.m.